What's going on, everybody, and welcome to the video. In this one, we've got a 31-cent penny stock that has some really big insider activity, and they've got some pretty big stuff going for the company right now. So we're going to talk about my thoughts on it and why I think it could be something that you add to your portfolio. Remember, everybody has different needs and preferences in their portfolio, so keep that in mind. This is a risky play, as it is a very volatile penny stock, as you can just see from the chart. I mean, in a one-day return, it made huge returns, but also fell right back down. So if you do enjoy this type of content, all I ask you subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. But let's go ahead and get straight into this company. So it is a company called Venus Concept, ticker VERO. Traded for 31 cents. Been pretty flat over the past few weeks. And let's go ahead and show you the past 5 days, though. They were up 7.6%. But the past month, we're looking at up 12.25%. The past 6 months, they are down. In the past year, they're down 81%. This used to be a $1.60 stock, and they have a market cap of about 21.42 million. Now, I want to show you these key stats on FinViz a little bit. Insiders own about 4.5% of this $20 million company, and the insider transactions have increased 135% over the past 6 months, which is very big. Insider transactions, insiders will sell stocks for different reasons. They might not be selling for they think the company's overvalued or whatever. That could be the case. But when insiders are buying, they're only buying to make money. They're not buying to lose. So that is one thing to keep in mind. These insiders know their company best, and it seems like they have huge belief in it. Earnings per share this year have increased 81%. Next year, we expect 45% growth. And here's just some key stats. Sales quarter over quarter, 5.8%, which was pretty interesting. Now that I look at it, their past income statement, which is incorrect. They did lose some money over the past quarter from Q3 21 to Q3 22. But also the short interest on this is not very high. A lot of these penny stocks, you will get to see very high short floats and very high short ratios, but not the case for VERO. Now I want to show you the insider activity down here at the bottom on FinViz. You'll just see there is some selling activity, but I don't think that's a massive concern. This is all the same person selling at costs a very less or near the same of where it is right now, even less, but here is that buying activity, value of 250,000, value of $50,000, a lot of buying activity. There's all November, September, a lot of activity. They were buying at prices of 20 cents, 60 cents, 70 cents. These are people that are still holding their shares because they haven't reported any selling activity. So they have to have some decent belief in this company. Now, we've talked a lot about this. Who is this company? So they're a patient demand for non-invasive cosmetic procedures. What they do is they have all of these different products. I'll show you them in a second, but they're an innovative global medical aesthetic technology leader with a broad product portfolio of minimally invasive and non-invasive medical aesthetic and hair restoration technologies. Very complicated to break that down. What they do is they use radio frequency and these lasers and other safe and effective solutions for many common aesthetic concerns, like how you look, things such as acne, scarring, stretch marks, excess fat, and more, hair issues, hair loss, things like this. These are the machines that they currently have, and they're already working. The sales, I believe, right now are about $100 million a year. But here's something that came out in December, a little bit less than a month ago, but they got a 510K clearance for its AI.ME next generation robotic technology for fractional skin resurfacing. So what that is, what a 510K is a pre-market submission made to the FDA to demonstrate that the device to be marketed is as safe and effective as something that is legally marketed already. That's basically the equivalent. And they have to compare the device to one or more similar legally marketed devices and make support to kind of show that they have this effectiveness. And they did do that successfully. And this is for fractional skin resurfacing. Coming from the CEO, it's a first of its kind robotic platform offering physicians minimally invasive treatments for high demand procedures with fractional skin resurfacing. We see this as a versatile platform and will continue to develop the platform to provide innovative solutions in various areas of medical aesthetics, starting with fractional skin resurfacing. Brings us closer to the step of just growing more and more. And then this system utilizes an advanced visualization system, machine vision, and AI algorithms to target the dermis in a pre-planned, selective, and predictable manner. So it's kind of a machine doing these procedures, which is very, very big and could be very well and change the market very, very widely. Now I'll show you a little bit more on this company. Earnings are expected to go from negative 64 cents per share to negative 32 cents, which is a huge decrease, or I guess increase technically. But sales aren't expected to grow that much. I think it's just simply because, they have their products in line and they are working on new products. They just got this 510K, which is very big. And maybe this is a little bit lagged, But we could see, I think if people are investing this for more longer term, they're not expecting a huge catalyst to come very soon. But this is one of those more longer term plays. I want to show you their most recent quarterly financial results. Just looking at this, total revenue was 21.5 million, down 3 million or 12% year over year. GAAP net loss attributable to stockholders was 14.6 million compared to 9.8 million last year, and EBITDA was a loss of 7.7 million compared to 3.5 million last year. Showing you a little bit more, they said the decrease in total revenue was driven by a 43% decrease in lease revenue and 15% decrease in services revenue, offset partially though by a 30% increase in systems revenue and 6% increase in products revenue. Their gross margin did decrease primarily just because of revenue was down, but they also did have a 1.4 million write down of the end of life devices and parts inventory and a 0.8 million impact from changes in foreign currencies, which depreciated relative to the US dollar in the period. And then the change in total operating expenses was driven by an increase of 2.1 million or 18% in G&A expenses and an increase of 0.6 in R&D, but a decrease of 0.7 million in sales and marketing expenses. And I also wanted to show you their balance sheet because they do have a very good balance sheet, to be honest. Although their cash and cash equivalents and total current assets have decreased a lot from 2021 to 2022, just over the past 9 months, they still are looking very solid because total current assets is way more than total current liabilities. 80.7 million in total current assets alone. And this being a $21 million company is something to keep in mind. But total assets 120 million, total current liabilities is 29.5 million, and then total liabilities 110 million. So this is something to keep in mind. They do have a lot of debt, just in the sense that 77.6 million in long-term debt is a lot compared to long-term assets of 39 million. But currently they are looking good in a financial stance, just looking at it from that. And then analysts do seem to like the stock a decent amount. On tip ranks, we're seeing 180% upside. Average price target being 88 cents with $1.75 being the two price targets. I don't know exactly when these price targets were given. I can't see it on this, but I can see on Wall Street Zen, we have one strong buy rating for $5.50, which is 1,600% upside, 1,650 to be exact. And this rating was given right here of top 4% of BTIG analyst. And what we're seeing is this is from June 24th of 2022. So about 6-7 months ago, this came out and he put a $5 price target on the stock. Remember, if this was in June, around this area, this was still a 60-70 cent stock. Right now it's 31 cents. And I'm not saying just because the stock was a higher price in another time that it's going to recover. That's not how markets work. But keep that in mind. If this is something you enjoyed, make sure to subscribe to the channel, turn on post notifications so you don't miss out on any of my future content. Check out the links down below for free stocks and free money. M1 Finance, it's what I use. So keep that in mind, and I will see you at the next video.